Good morning, students. We are on chapter number 6 of account part 2, that is conventions, assumption, concept and principles of accounting. Today in this lecture we are going to talk about the going concern concept. Going concern concept. Basically, friends, according to this concept, it is assumed that business will be continued for a long time. It is not going to be dissolve within a very short time. It will continue for a long time. This is an important concept of accounting. When business is started, it is assumed that the same will continue for very long period in future. Therefore, it is called going concern concept. The following are some of the practice and illustrations based on this concept. Let us see some practices and illustrations based on this concept. First one, fixed assets are shown in the balance sheet at their depreciated value based on what? Based on going concern concept. In other words, realizable value or market value of fixed assets are not shown in the balance sheet, as the fixed assets are for use in business for long time or long period and not meant for sale. Their market value are not shown in the balance sheet based on going concern concept. So friends, fixed assets, their market value may be more or less, but we show the fixed asset in our books of account at depreciated value, which is what? Based on going concern concept. What else? Prepaid revenue expenses are shown in the asset side of balance sheet because of going concern assumption that business will continue for a long time. It is expected that the entity shall get the benefit of such prepaid expenses in future. So second illustration of this is what? Prepaid revenue expenditure. Prepaid revenue expenditure, they are shown at the asset side because in the near future we are going to get the benefit of such prepaid expenses. So this is all because of all based on going concern concept. What else? Deferred revenue expenses are sometimes shown on the asset side of balance sheet because of going concern assumption that business will continue for a long time and it is expected that the entity shall get the benefit of such expenses in future. So same like prepaid revenue expenses, deferred revenue expenses are also shown at the asset side just because business will continue for a long time and we will get the benefit of such expenses in future. What else? Semi-finished goods or work in progress is valued at cost incurred thereon and not at their realizable value. This is because of going concern assumption. At any given moment, business enterprise may have some semi-finished goods in process. If the business is to be liquidated today, such semi-finished goods may fetch a very low value if it is sold as such, and it has to be valued at such realizable value. However, because of going concern assumption, we assume that manufacturing process will be carried out till the completion of finished goods and therefore the final product will emerge. Hence, such semi-finished goods are valued on the basis of cost incurred thereon and not at their realizable value in semi-finished condition. Friends, semi-finished goods means the goods which is neither a raw material nor a final product nor a finished goods. It is the stage where some process is already done on the raw material and it is not yet over. That means entire process is not yet done. So it is at the middle stage, which is called semi-finished goods or work in progress. Now semi finished goods or work in progress, if it is there at the end of the year, it is recorded in the books of account as an asset, and its valuation is done equal to the cost incurred thereon. That means whatever is the value of raw material and whatever is the cost paid for the half process, whatever process has been done, that much of amount is considered for the valuation of such goods. In reality, if you go to sell out that semi finished product in the market, immediately you will get very low price, because it is not in, neither in the state of raw material nor in final product, so you are going to get very less amount for that, right? But we know that we will continue for a long time. That means our business will continue for a long time, and our manufacturing process will be completed on this product, and final product will emerge out of that. So we will be valuing the amount, the value of that stock as their cost, not at the market price. Okay, what next? Financial statements are prepared at the end of the accounting period. When the life of business entity is of very long period, on the basis of assumptions of going concern, stakeholder or persons who have stake in the entity cannot wait to know what is the performance or position when it is closed down or liquidated. Hence, to get information about the profit or loss or about assets or liability at reasonable interval, accounts are written regularly and periodical financial statements are prepared at the end of the accounting period. This statement can also be associated with the accounting period concept. Right? Friends, there's a concept, means annual accounts, financial statements are prepared at the end of accounting year. This is based on going concern concept. This can also be associated with the accounting period concept, which we are going to learn later on. That one is the fourth concept in our list of the principles which we are going to learn, because the person cannot wait. Person, that means here we are talking about the stakeholder, those who have stake in the business, those who have invested in the business. They cannot wait for the final performance of business till its lifetime, so that its life of business is subdivided in different small part, normally of 1 year, and where results are calculated, whether business has made profit or loss, or whatever is the result is calculated, so that those such result becomes helpful, becomes useful to the users for taking correct decisions. What else? Distinction can be made between capital expenditure and revenue expenditure because of going concern concept. Friends, because of going concern concept, you can classify the expenses whether they are capital expenses or they are revenue expenses. Revenue expenditures are generally those expenditures whose benefit is available for 1 year, and capital expenditures are such expenditures where the benefit of such expenditure is available for more than 1 year. Okay friends, so this was all about the going concern concept. Let us see some situation where going concern concept or assumption should not be followed. See friends, it should be noted that in the following circumstances, going concern concept or assumption should not be followed. First condition, when the object for which the business was established is achieved or is likely to be accomplished in a very short period. Friends, if your business is done or business is established to ascertain or to achieve something, and suppose that thing is achieved or likely to be accomplished in a very short period, in that condition going concern concept or going concern assumption will not be followed. Second, when an industrial unit is declared sick, if any industrial unit is declared sick, that means there are chances of growth are very less, and there is no development, then also the going concern assumption should not be followed. Third, when a business is passing through severe financial crisis and is likely to be liquidated very shortly. So friends, if any business is any business is suffering from the severe financial crisis and it is going to be liquidated very shortly, then in that condition also this principle should not be followed. And what else? The last one is when a liquidator is appointed for liquidation of a company, entity, unit or firm. So if any firm or entity or business unit is going to be liquidated and a liquidator is appointed, in that condition also that going concern assumption should not be followed. Okay friend, so this was all about this going concern concept. In next lecture we will be doing next concept. Thank you.